The student loan debt is also the number one financial asset of our U.S. government, of our own government. The time I've been in Florida, the average cost of tuition and fees has shot up 60% in real terms. 60%. But in that same time frame, the median household income, and I'm going to show you something that most parents and grandparents never hear about. Stop using 529 plans to save for college. Today, we're going to dive into something that weighs heavy on the minds and wallets of millions of families and college loan debt. And you've been told that 529s are the answer. But what if that's actually the trap? So let me hit you with some shocking statistics. Recent estimates show that the U.S. student loan debt is somewhere between 1.7 and 1.8 trillion with a capital T dollars. And over 90% of that is owned and held by our federal government, your Uncle Sam, your great uncle. And it's about 42 million Americans share and carry this burden. And that's not just a statistic, it's generational weight. It is starting off when you're already buried in under a weight of debt. And here's the kicker. The student loan debt is also the number one financial asset of our U.S. government, of our own government. That's not education. That's entrapment. Now, I want you to answer in the chat, yes or no. Can that be a coincidence? And this isn't just about national numbers. It's about your family. It's about your journey. Because between 2000 and 2022, the time I've been in Florida, the average cost of tuition and fees has shot up 60% in real terms. 60%. But in that same time frame, the median household income has only crept up about 15 to 20% after inflation. So that means that college costs are outpacing our income change by 3x. It's multiple times faster than what most families earn. And that's according to the Social Security Administration. And so the most recent data from the Federal Reserve and Education Data Initiative show that the average federal student loan debt for U.S. borrowers is approximately $37,000 to $38,000. Now, that's not talking about graduate school and doctorates and things of that nature. We're talking hundreds and hundreds of thousands of dollars. So let me ask you this. How many of you have ever felt that tightening in your chest when you're looking at your kid and you think, man, what's college going to cost by the time you get there? Or maybe how many of you are still trying to climb out of that student loan hole yourself? I know Patty and I still carry that burden. And you swore you never let your kids go through that same thing. So if that's you, you're in the right place. And let me just say, as always, thank you for showing up and giving me your most valuable asset, your attention, your focus. You didn't have to hit play on this episode and show up the way you did, but you did. And that tells me a lot about you. It tells me one thing, that you care deeply about your family's financial future. And today I'm going to pull back the curtain and I'm going to show you something that most parents and grandparents never hear about. And it's a better way to fund college or insert life dreams without ever touching a student loan. Imagine if you and your loved ones didn't have to start off burdened by a pile of debt, by trillions of dollars of debt. So what you're going to discover today, what you're going to walk away with, your action steps, you're going to understand and have a clear understanding of why the traditional college savings advice is flawed, why it's limited. There's nothing wrong with it, but it's limited, and why long-term thinking and planning compounds to big results. And you're going to take this approach to build a flexible education fund without the market risks, without the penalties, and maybe most importantly, you're going to know how to build a legacy of financial control and solid financial education, the systems and processes, the real-time teaching, as I'm going to show you as we go further into this episode. So you don't want to miss this, because I'm going to keep talking about real-life scenarios, things that are happening in real time in my life, and they can be happening the same way with your kid and your child's future. So this is about how we're going to build smarter futures without debt, a sovereign future, So, would it be okay if I share a little bit more about why you can tell I'm so passionate about this, why I'm standing here today with all of you? And thank you. I'm going to take that as a yes. And imagine this I love doing imagination. You're at a fork in the road once again. We've been here together before, haven't we? And I want to share my story, a real story. And it happened to my oldest son. Well, happened to us about 5 years ago when Diego graduated from high school, nearly 6 years ago, graduated high school, and he decided not to go to college. And that was the right choice for him. We supported it. But here's the problem. We had been saving and putting away money on a monthly basis for a decade plus to the Florida prepaid, which is similar to a 529, but a little different, more Florida based education. But we called them up and I wanted to know what were our choices. Hey, our son's not going to college, and I don't know if it'll be rather than a when, it might be a never at this point. So, what do? We've been putting the money in there. What can we do with it? And we had two choices. Choice number one was, hey, you can transfer that to a sibling to use within 10 years for any Florida school. And I was like, well, that might not work. His brother is almost 11 years younger. And so that makes him like 6 or 7 years old right now. And, you know, I don't think he's going to be going to college when he's a sophomore in high school. Might be smart enough, but that really wasn't our vision for him. And the other plan was you can take the money out at market value, like wherever the market was, and luckily it was not down, and you can pay the taxes. You can pay the taxes on the growth in that plan. And so we had to do the latter. Because again, Connor's not Doogie Howser. He's a smart kid, but being a great student, that again didn't fit our family vision. It wasn't the choice for him. So we ended up taking that money and we put it into a plan where it helped us take back control of our money. It helped us to pay off the debts, and it built for our future together. It started building the systems and processes that I'm talking to you guys about today. And so what we're doing today is the purpose of all this is to show you how to fund your child or grandchild's future without falling into that student loan trap, without being one of those 42 million statistics owing almost the payment of a car, right? A new car. And we're going to walk you through how infinite banking works, why it's different, and offer you more options, control, and guarantees on how you can start this early. And the payoff, you're going to leave with a roadmap to build smarter, safer, more flexible education fund, one that empowers your family for generations, not just short term, but for generations to come, long after college days have come and gone. All the partying has long passed, all the memories, the games, the things, this carries on for generations past that. Let's look at the two different paths I mentioned, right? I talked about how there's two different paths. And this is why the traditional model fails most families. Let's be honest. It's broken. It's outdated. It is another one of the plans that was created. The 529 is part of the tax code, the IRS tax code, and that didn't come around to 1913 and the modern tax code as we know it. And that has been shifting and changing and has these little additions. And now it's like 7,700 pages long. And there's always, every time there's a problem, there's a new solution that Uncle Sam offers us. And would it surprise you that every time that the person that caused the problem offers the solution, guess what? It might not always work out the way that you expect it to and the way that you believed it should. Because a lot of this comes from our belief, right? We're all wired to think, hey, save for our kids' future. That's amazing. And I agree. It is amazing. And 529 plans is a better plan than no plan, because just hoping that your kid's going to get a scholarship, just hoping that things are going to work out, well, that ain't a plan, right? Come on, man. That's no plan. A plan is something that you see, you execute, and you adapt to and change, and you stay persistent and consistent over time. And like my story, right? This fork in the road that we talked about, these two choices that are going in opposite directions. It's almost like when we talk about the wealthy are going in this direction, and then the majority of people are going in this direction. And the majority of people are the 42 million plus and climbing. that are going in the opposite direction as what I'm telling you today. So stop doing that today. It's a choice. Like Diego, if your child decides not to go to college, what's next? On the one side, there's penalties, there's taxes, there's limitations, and any gap in the funding, guess what? Someone will be there to lend you the money. And when they lend you the money, who do you owe? There's so many times recently where I've been helping people with the vault and going in and helping them map out how they're going to take back control of all that debt, where the student loan debt will never get paid off because the interest rate is just high enough that all they're doing for 30 plus years is paying interest to somebody else. So being 34.6% of our federal assets, student loan debt, then it's not surprising that they would keep giving loans, is it? Logically. You guys get that? Does that make sense? And like I said, when your child doesn't go to college, there's going to be the penalties, there's going to be the limitations, the taxes. And when there's the gap in the funding, you're going to do what? You're going to take on another loan. You're going to join those 42 million that are already carrying student loan debt. And you're borrowing this assuming that the college degree, that the education, the thing that your child is passionate about, is going to deliver a return that outpaces what they pay over time. It is the fourth law of wealth. They're investing in themselves. And that's what we want. We want that for all of our kids. We want them to invest in themselves to be whatever it is that they're passionate about and pursue that with everything they've got. You guys agree with that? That's all I want for my boys. Go find the thing you're passionate about, get up and do it until you become a master at it. And then if you need to pivot, pivot. But think about this. How many of you are using your college degree? Can I get an eye in the chat for all my college graduates here? And put 2 eyes if you have a master's degree, 3 eyes if you're a doctorate. Let's see how educated this group is. You know, I have my bachelor's, some post-grad work. I have a half of MBA, but I dropped out when I realized that it was serving my ego and I didn't want to climb a corporate ladder. What did I want to do? I wanted to serve and bring truth to you guys. And 84% of public four-year colleges is the tuition is so far outpacing the income that it's harder and harder to even make this model work. So you're trading your child's future potential for 4 years of college debt, right? Is that legacy or a liability? Let that sink in for a moment. The traditional path has that poor young woman holding mounds of debt. And look, she's like, what do I do? Anybody have a match? Another one's like, yes, I can. I've done it. I've conquered, and I'm going forth with no debt. I have taken loans like I'm going to show you from my family bank. I'm going to share a story too. So if you're new here, right, this is the time when I need you smashing stuff. I need you smashing that button. I need you subscribing to the channel. We're almost there, everybody. We've almost got 1,000 people on this big bleep infinite banking bus, and we want more of you joining. Remember, it's a big ass bus. Bring everyone on, ring the bell, be alerted to the new content because I will continue delivering you truth and a better path forward. One that empowers you, one that gives you guarantees, and one that builds a legacy that you used to only dream of. But now you're here because you know that is inevitable as long as you stay the course. And I just went through why the traditional model fails. I talked about the funding gaps. I talked about the taxes on the non-qualified expenses. And what if the market crashes? I didn't talk about that, but what if the market crashes before graduation, before you start paying the loan back or you need the money? That becomes what? A burden, because now the money you put in there, the growth you thought you were going to have, you don't get it. You don't get it. And a lot of times these plans are sold on the promise of higher earnings. But if our tuition's up 60%, income levels haven't kept up, then it doesn't matter how much you're making in the market, does it? Because the market's not keeping up with a 60% increase in tuition. So that money that you're locking up in this limited and maybe delicate, I'll call it, plan is not going to do everything that you need it to do. So if your child too, like Diego and like many others, takes a different path, what do you do then? Wouldn't you want something that you can go and say, hey, you know what? He didn't go to college, but he's going to get ready to go to the military. So now he needs a trainer, he needs a personal coach, maybe a nutritionist, maybe some new equipment. Let's use that money that was going to go towards his education to give him a different kind of education. Or maybe it's a trip abroad. Maybe it is contribution, going, doing a mission trip. What is that thing that your child is going to want that is different than maybe your dreams for them? You know, we all want, I mean, how many of you want something better for your kids? I believe everyone here. I know everyone here. Everyone here wants something better for their kids and their grandkids. So let's do this. What if on day one you had set up a properly structured whole life insurance policy from a mutually owned dividend paying whole life company that supports the infinite banking concept? Yes, that's a mouthful. And we learned to say it because it is all important. Every one of those words: mutually owned, dividend paying, never missed a dividend in 100 plus years. And let's say you start early and you start putting $5,000 a year as soon as that child, we're going to call him baby cash, as soon as baby cash has his social security or her social security, they're 15 days old, and we're going to play a different game. There's going to be no market games, no fluctuation, just guaranteed, slow, steady, compounded, tax-free growth away from Uncle Sam. Guaranteed. And that's just the start of infinite banking. And when we look at this powerful model, now he has this. And this is not just for college. Look at years 2 through 17. This is going to be one of the examples I'm going to talk about in a moment. And one of the lessons that came in real time during a call this week. When your kid starts their first business, whenever that is, maybe it's at 9 or 10 or 11 or 12, maybe they got a lemonade business, a candy apple business. Maybe they're doing editing because they're interested in learning things on the computer. And that's something Connor's just recently started. And so recently, and I've talked about this, but he just stored all of his earnings, all of the gigs he's done that we have paid him for, whether it's pulling weeds or spring cleanup or whatever, that maybe it's a brain gig, reading. And he's taken all this money and he's put it into his specially engineered whole life policy that's already a few years mature. And instantly, of the 2017 bucks he put in there, he has 90% of that available as cash value. His death benefit increased a little bit. And it probably increased the likelihood that he is going to receive another dividend from his partner, the mutually owned company. This is his partner. My son's got a partner already at 11. How many of your kids and grandkids need a partner like this? Not Uncle Sam, but this kind of partner. And so now this is what happened in real time another day. This is super cool. He had his uncles, got his uncles involved because they're more tech savvy than his father. And, you know, he's got his uncle Nanyo and Tio Peachy, and they told him like, hey, this is a good computer. This will last you a long time. It has plenty of RAM. It has plenty of all the other stuff you need in a computer. And it has, get this cool headset with it. And you look like a gamer, right? Like the people he watches for YouTubers. And he's doing editing for our neighbor's business. He does some editing for our business. And he decided that he's going to buy this computer. So he did the research. He has a business model for how much he's charging. He has a contract in place. He's gotten paid. And now we're waiting for him to get paid a little bit more consistently. And then we're going to let him take that loan. And this is not for college, right? This is before college. But if he had a 529, would he have the flexibility to borrow from that plan? No, not without penalties. And so now here's an actual example. He's buying a $797.57 computer. He's 11. And it's from the money he earned and put into his plan. And he came up the other day when I was on the phone and I was like, hey, bud, how much are you paying this back per month? And at first he said 40 bucks. I was like, I don't know. That seems like a long time to build back up to $800. You're probably going to make $5,000 this year. So how about you pay back a little faster? He's like, okay, Dad, I'm going to pay it back in 20 payments. I actually made this number because I'm trying to get him to do a little more, but he told me 20. I worked it up at 12, and it shows you if he pays it back this way, his system that he controls the loans, he controls how he pays it back. Guess what? Now, in this example, Connor will have the $800 to use again for another tax-free loan. All $800 has continued to grow uninterrupted at the guaranteed rate. And in this contract, it's 3.25%. And he'll still earn dividends on this as long as they pay a dividend for the 149th year in a row. And so now he's using and learning how to be a banker, how to run a business, how to have capital and finance himself. This is something he's learning at 11. How many of you learned this at 11, right? I know I didn't. And I know that everyone here would love to be having these conversations. At least that's my hallucination with your kids, with your grandkids, because this is how they actually learn. They actually learn how to play honest banker by doing this. And, when he's doing this, maybe this is going to go towards education as he builds it back, right? Let me show you when you're setting this up. I love this question. What if you, changing gears a little bit here, so bear with me, but what if you just walked up to someone and said, hey, that saying that we need our money working harder than we do? How often has your money worked harder than you have in your life? And if it hasn't, would you like your money to work harder for you? Would you like your money to do two jobs at once? Would that be something you want to do? And so by using this system, the system that we set up for all of Connor's milestones just 3 years ago, we didn't start when he was 15 days old because I didn't know about this then. But imagine like baby cash, you just started putting $5,000 into it a year. But now his money is growing uninterrupted and compounding. He's borrowing it for the first computer and paying it back and learning the systems and processes of using this as a bank. And guess what? There's no penalties. There's no risk. There's no red tape. And there's also protection. But we're not thinking about that. We're talking about the verb of banking. We're talking about the verb of banking as we go through this. And here's the example of baby cash. Baby cash keeps putting money in, and I believe I designed this for $5,000 a year for 15 years, and then it drops down to the base of $2,000. But look, baby cash will have $98,000 ready for college by the time he's 18, or by the time she's 18. And Connor, I know with his policy, he'll have about $82,000 at the same time. And by the time he's 16, he's going to have at least $58,000 available. He's definitely not getting a $58,000 car unless things have drastically changed with his editing business, with our business. But we'll have that option to get him a car that we feel comfortable with and that he's excited about, and he will have a plan to pay it back. Baby cash goes to college, and guess what? Now he's taking a loan from the bank of mom and dad or the bank of grandpa or grandma, and they're paying it back. It's like I was at a seminar earlier this year, and the guy on stage is like, yep, I'm a third generational banker. My family has 70 policies. And he didn't say it like this, but he's like, yeah, we have 70 policies. My grandfather started a bank, and they never handed me anything. I always had the resources. I always had the thinking around me, and that has set him up to sell, I think, 76 companies back in 2022 for about $1 billion. And now when he was in college, he was hanging out with his roommate, and his roommate's like, hey man, Eddie, I got to go down to the bursar's office. And Eddie's like, dude, what? Why you got to go to the bursar's office? Because I got to go sign for my loan, for my student loan. And he's like, what? What do you mean you have to go take a loan from somebody else? Doesn't your family have a bank? Eddie had just grown up thinking everybody had a bank. Everybody had a trust system that had $150-some million in it for the things they needed. And Eddie said, hey, while he's borrowing at the 4 or 5%, back in the early 2000s, I was borrowing at 11% from my family. But guess what? All 11% goes back to the Wilson family. So think about put your name there, put your banking system there. What if that's you? What if that's something because you had the vision, the long-term thinking, and you had a system in place that when baby cash gets to be 18, there's 100,000. If you're putting 10 grand in a year, There's 200 plus $1,000. You can set them up to be successful for whatever path they choose. And it's the same. I was thinking about this right before we went live. What if your kid gets a full ride as an athlete? That's awesome. But if the money can't be used for anything other than tuition, now what do you do with that money? You transfer it to an IRA, you keep it attached to the market, you take it out with a penalty. Again, you can't use it for anything that you want to, unlike a specially engineered whole life policy where you can do anything that you want to do. You can do anything you want to do. And again, this isn't just about tuition. This is about options. The first one's a little strange, so I had to redo that one, but it is about options. Traditional college, start a business, travel and learn, trade school, go to the military, and even more valuable, your child is learning how capital works. The flexibility that empowers your child's future now or your grandchild's future now, and lets you say, or lets your child decide, hey, college is not really for me, mom or dad, or it's not for me right now. I want to step away. I've been so used to, trading my time for good grades. And I'm really curious about this new technology, or I'm really curious about maybe I want to go to Mars, whatever it is. I mean, I said that just for Patty because she'd go to Mars if we let her. And so maybe they want to start a business. Maybe they want to continue in your business. Maybe they want to travel, learn a trade, learn a new language. With infinite banking, that policy can be their launchpad, not a burden. You're no longer stuck in that qualified education expense box per the IRS tax code 529. Your money, your rules, privatized banking, no penalties, no market risk, no bureaucratic red tape, none of that stuff. And here's what I love most, right? Come back to love. You're teaching your child how capital works. You're making money nothing more than a tool. You're showing them what it looks like to be in control of their own banking system. That's a lesson that's far more valuable than dollars and cents and anything that they're going to find in a textbook. So this is how we change futures together, not just for our kids, but for generations. The power's been removed from the government. Stop doing a 529. Put the control back in your hands. Stop playing their game. Create generational legacy. Create multi-generational legacy. What started as a college fund doesn't end there. This financial tool grows with their life. We said this on the 2-day. It works when you work it. It continues to grow uninterrupted and compounding as long as you keep feeding it, your partner. It supports their family's future. It becomes a piece of your legacy, passed on with the wisdom, the education, and without the debt. Because here's the truth. Today, we didn't just solve for tuition. We're solving for empowerment, for freedom, for generational wealth. Look, having a degree, I'm not saying don't go to school. Having a degree still tends to have a higher lifetime earning potential than someone who's dropped out of high school. But the gap between what people pay to get that and what they get back is narrowing, and it's quickly narrowing, folks, especially if you have to borrow heavily, because college costs have ballooned. I've said this 3 times already, way faster, 3 times faster than the earnings. And many families find themselves paying back more upfront. I know because of the 1,000 calls I've had, they're not breaking even and they're hoping, they're saying, man, I hope John, I hope Jenny gets a good position after they get out of college because they were paying 40 or 50 grand a year. Like my $40,000 in student loan debt, my university is now almost $50,000 a year. That's bonkers. Who'd pay that much to live in the coldest place on the face of the earth? Nobody. You have to be crazy. But that's the risk that many people aren't talking to our kids and us about because we didn't know. And so let's recap all this. Let's change this one family at a time, one future at a time. Why 529 plans lock you up into a rigid, risky outcome? You saw how the infinite banking structure gives you freedom, flexibility, control, and allows you to teach real lessons in real time. That's my favorite part. and how starting early can create a fund that works whether your child chooses college, entrepreneurship, or anything in between. And more than that, you saw a new way forward, one that trades the fear for freedom, the gap for the gain. And that's what this is really about. It's not just paying for college, it's about teaching your kids how money really works, how legacy is really built, and how to live empowered. I shared the stories earlier about how kids are buried in debt before their life even began. But the better story, the other path, the less traveled road, the ones that all of you are on, is the parent who said, not my kid, not my grandkid. We're going to build a smarter system. They pass on the wisdom and the wealth, not just the tuition checks. And remember, your purpose here today was to change how we fund education in this country. Stop being Uncle Sam's asset, number one asset. How we can use the infinite banking structure to create this flexibility, safety, and guarantees, the control that we all know and want and desire. And the payoff is that you're sending your kids into a world empowered, not under pressure. So if this resonated with you, right, if you said, not my kid, no 529 for me, if this resonated with you, don't keep this to yourself. Make sure that if you need to set this up, take a chance, have that conversation with me, scan the QR code, and have the conversation how you can set up your kid, your grandkid, or the grandkid that's on the way within 15 days with a plan that'll grow with them for the rest of their life. And as you saw, we're not talking giant numbers, 5,000 a year, 3,000 a year, 10,000 a year, whatever it is that makes sense for how much you want to put towards their future. We can set them up to empower them. So you've learned the path. And if you're ready to learn more, to dig deeper, book that call with me, scan that QR code. And as always, share this message with others. Share this message with others. Invite them to our big ass infinite banking bus. It's huge. I don't even know how far back the seats go. People just keep getting on and on. We got the cool kids like Dex and Shane sitting in the front. We got Patty. You know, Patty's probably the bus driver telling everybody, come on, everybody, get on my bus. And everyone wants to get on a bus that Patty's driving because it's going to be fun. She's probably going to go too wide like they do in Ecuador driving down the lane. But you can get on the bus, you can get off the bus, but bring more people to the bus. I had a pastor share this with another pastor the other day. Let's spread this message. And as always, I'm going to see all of you in this next video, and I'm going to see you the next time. And I am so blessed and grateful for each and every one of you. You keep showing up. That means everything, because you're not showing up for me. You're showing up for you. You're showing up for your future, for the future that you are building towards, that you dream of, imagine, and want with every fiber in your body. So stay empowered, stay blessed, and thank you for your time and your energy. You guys are awesome.